What's going on, all my Sofi hodlers? Welcome back to the channel. We have a lot to get into here in this video. There's a lot of pain on Wall Street, specifically in our portfolios. Yes, a lot of high growth stocks like Sofi are beaten into the ground today. Sofi is down about 7.5%, but I do have some good news to bring to you guys here in this video. At least in my personal opinion, this means that the Fed rate hike, the Fed meeting, the Fed expectations are priced into the markets now, even more than what I said over the weekend, even more than last week. And what I mean by that is the Fed will have to come out and really give us something else to fear to see the markets continue to head down. It's likely we will see a rally, but we'll talk about that more throughout this video. Hit the like button, subscribe to the channel. You guys definitely do not want to miss these videos because yes, it is that time of the night to get into a Sofi stock update. Also, if you guys want to support the channel, links in the description for Webull, Moomoo, and Public to get yourself some free stocks. Moomoo will give you 3 free stocks just for signing up and depositing $1. You will also get an additional free share of NEO. That is 4 free stocks in total for depositing $1. So nonetheless, let's get into this video. Sofi stock is currently sitting at $7.89 per share, and you know what I think about that. I think it's time to buy 25 more shares of Sofi. If we're down again tomorrow, I will buy another 25 more. If we're down more after the Fed meeting, I will buy another couple hundred more. Now I gotta wait for money to clear and all of that, but nonetheless, time is now to buy Sofi stock in my personal opinion. I'm very excited about Sofi. Why? And it comes down to the simple reasoning that I gave you guys is the markets are pricing in 5 rate hikes between now and September. Some people say 6, 5, 6 doesn't matter for the kind of market that we are in. Uncertainties that are going on. Too much to ignore. Too much. And think about back 2021, the Fed was so careful. They wanted to be right on with their timing to raise rates. Did not do that when they should have, and they know now that they should have. Why did they not raise rates then? Because they didn't want to force the recession. Thing came out. If the pandemic got 10 times worse and the Fed, you know, that's a bad scenario. Really bad scenario. Economy gets shut down. Get good. So they didn't know what's going on. You have a lot more geopolitical risk, a lot more spillover risk from Russia. You know, Europe was invested more than we were. You know, China is invested in more than we are, but we are invested in Europe and China times more than we are in countries. Start to take hits economically. There's talks about Europe going in as Q2 of 2020. Talks of China, and there's been out the crisis going on over there. They are cutting rates. Their economy is in as well. Consumers saving 4 times as much money now than a year ago. You get the idea here. There's a lot of contagion going on, and that could bring the whole global market. The last thing I think that is to push us into a deep the way. Because the Fed, they have to raise rates this week, March 16th. Look what they expect after this meeting. That's what's going to be investors. And I think their price rates, even on the inflation side, do inflation that we are seeing. Inflation, oil inflation, as well, energy inflation, as well as food inflation. Think about that because that is not a problem. I feel like I'm preaching. Slap CNBC around because sometimes what we're talking about when the Fed says directly, hey, we can control aspect raising that will bring down inflation. If you have Russia invading another country and you have all of these other factors, energy, food, obviously the supply chain, which is making their supply chains that much worse, which is going to I don't have just let me know down in the comment section. Long story are pricing in too much pain for hawkishness in general Nonetheless, let's get into some of the other information that is coming out to us right now. So you do have Sullivan. He is speaking, and it says Yang had substantial discussion of Russia's war. And then it says China can do more than most to help end Ukraine war, which is very true. Russia just asked China for military assistance, and it looks like China's doing that. At least that's what U.S. intelligence is saying. It says U.S. raised concerns about China's support to Russia in Rome. And that's what it basically says again. Raised concerns to China about Russia, about supporting Russia in that meeting. So there's a lot of fears today as well about possibly sanctioning China, which for Sofi, that doesn't matter, but SoFi is going to do what the broad markets do. SoFi is not going to be the, the lone wolf here that just rallies without the broad markets rallying. No. But SoFi is particular in the sense of it's hurt a lot when the Fed raises rates too aggressively or gives us that signal that they're going to raise rates too aggressively. SoFi gets decimated, but SoFi will react very well if the Fed is dovish. So I do think that meeting Wednesday is going to be very important, and it's going to be a dovish thing. So just the summary of that. At 2 p.m., we get the Fed dot plot. We get the report, the prepared statement that comes out. As well as that, we get the summary of economic projections, which is what the Fed thinks for the economy. All of that comes out at 2 p.m. sharp. It will be posted to the Fed's website. The markets will react very aggressively, one way or the other. Literally, you could see a drop in the markets down 1%. You could see the markets go up 1%. It can be very violent, but you won't know the actual move of the markets because of the Fed, if that makes sense, until 2:30 when Fed Jerome Powell starts to speak and they start to ask him questions. But I think this move down today really lets off a lot of that risk of seeing another potential big move to the downside. Certainly it could happen, but there's also talks of Russia-Ukraine ceasefire. So this could all culminate into a day where there's a lot of bullish news, and you definitely don't want to miss out on that rally. As far as the Ortex data, we're getting 100% share utilization, a 3.97% cost to borrow max, a short interest of 18%, and current shares that are sold short of 130 million. Now, we are not really prone to see a short squeeze, but it could certainly happen nonetheless. But on top of that, these shares will have to be rebought, and this just goes to show there's no more sellers left in SoFi stock. When the short interest really started to explode over 10%, was around $15 per share, and I think the sellers, the people that actually own SoFi stock in their long-term portfolios, are not selling. It's the shorts that come in and provide that selling pressure to push the stock into the ground like we have been seeing. So you guys just seen, I bought 25 shares of SoFi. I plan to buy a lot more. I also did buy some SoFi calls. I bought April 14th, $10 SoFi calls for 33 cents a piece. The logic here is if we do get a bounce tomorrow, then, these should go up a lot, and I should be able to sell out 3 or 4, keep 1 for free, and ride it like that. Just hold my profits in this position. But even if SoFi doesn't rally tomorrow, I think it'll rally off of the Fed, and I do think that looks good on a risk to reward basis, as well as the stock. I have a lot of SoFi stock, not just in this portfolio, but in other portfolios, so I'm certainly looking to add more. I have a $15 average cost. I'll actually go ahead and buy 25 more because, geez, $15 average at this level doesn't make sense. So hopefully that brings it down a little bit more, but I definitely have a lot more work to do on that front. Now, as far as the technical analysis is concerned, we need to get back above $10 per share. I don't know if that will happen off of the Fed meeting, but it does look very promising that if the Fed meeting is dovish, that we will approach that $10 level again. Now, the 20-day simple moving average is at $10.62 per share, so we will see a little resistance around $10 as well as that 20-day simple moving average, but the 50-day moving average is at $12.13 per share, and then the real level we have to break out above is going to be that $14 share price. The RSI is approaching that oversold level. We are getting very oversold, and that always means we are due for a bounce. Once you hit oversold levels, you have always seen a bounce in the history of SoFi. So I think my call here is a good one. Nonetheless, the MACD is very bearish, which does support to me that we should definitely see a bounce as well. So that's basically the scoop. That's what you guys need to know. Hopefully we covered everything here in this video. If we did not, leave your thoughts down below in the comment section. What I missed, what I could add to this video, if I should make another one to add more. There's a lot to talk about, but I think this is the meat and the bones of what you guys need to know heading into this Fed meeting and what is driving down the markets today. So like I said, hit the like button, subscribe to the channel, as well as that, make sure to get your free stocks links down below in the description. Thank you guys for watching, and I will see you in the next one.